Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of S&P 500, Dow Jones, Nasdaq, so on and so forth. And then also I'm going to do the ETFs mainly in terms of analysis, in terms of SPY, and then QQQ. I'm going to go over the economic calendar, economic news, crude oil, 10-year treasury, and then in terms of the PCE numbers. But yeah, hopefully you guys like the video. Hopefully you guys enjoy it. If you do, consider dropping a like. It does help the channel, so thank you so much for that. And then before I go into terms of analysis, support levels, resistance, movements, so on and so forth, I'm going to go over the calendar first. So today, before I go cover tomorrow, we had the GDP numbers. Previously, it was 3.4%, was expecting 2.2, but got 1.6%. And the markets went down based off that predominantly. Initial jobless claims, 212,000 previously, 215,000 expected, and got 207,000 this time around. And this kind of affects interest rates too at the same time, because it's unfortunate though, but if there's less jobless claims, then they're assuming that the economy is like somewhat booming, so then less likely to cut interest rates, which the market doesn't want to see that. They want to see at least what they're anticipating is one interest rate cut from the Fed, but we'll see. And then we had the rest of the information is advanced U.S. trade balance in goods, negative 90.3 billion, ended up getting 91.8 billion. Advanced retail inventories was expecting 0.5%, got 0.3%. Advanced wholesale inventories, 0.5 was expecting and got negative 0.4. And then pending home sales, they actually increased, was previously 1.6%, was expecting flat and got 3.4%. Now the big thing for tomorrow specifically is the PCE index, because this is more specific than the CPI inflation numbers, right? So even if it increases a little bit, it's quite dramatic. And I'm going to give more details too and all that stuff. So at 8:30 a.m., personal income nominal previously was 0.3. This time around, expecting 0.5. And then at 8:30 a.m., personal spending nominal, 0.8 previously, expecting 0.7 this time around. And then 8:30 a.m. PCE index. This is specifically includes food and energy, by the way. So 0.3 previously, expecting 0.3, and then PCE year over year, 2.5% previously, expecting 2.6. Now the thing is, the Feds are going to more focus in terms of the core PCE. So for the core PCE index, previously 0.3, and then this time around expecting 0.3. The reason why they're going to more focus on this, by the way, in terms of the core ones, is because again, it doesn't include food and energy, and in terms, which is kind of beneficial. So they don't include it because it fluctuates, right? They fluctuate quite a bit hypothetically, but to them it's kind of beneficial, because if you take out energy, which was a big factor in the CPI numbers, which is inflation and all stuff, that was the biggest factor. So if you take that out, you almost have like less of an effect, if that makes sense. So then it makes it seem like, okay, we could kind of slow down and then cut interest rates. So it works towards their benefits if they were to want to cut interest rates, right? So we'll see. But either way, then the core PCE year over year, 2.8 previously, this time around 2.7 expecting. And then at 10 a.m. consumer sentiment final, 77.9 previously, and then expecting 77.9 this time around. Now a little bit more information in terms of the PCE numbers. So again, Fed's inflation report looms this Friday. What makes it so crucial for markets? And I'm going to get into more details, but indicating a potential hot PCE reading was the advanced estimate of the gross domestic product, GDP, published Thursday by the Bureau of Economic Analysis, which witnessed reigniting inflationary pressures in the first quarter of the year. And then in terms of PCE, just a little bit more details. Again, the core one is the more important one that they're looking at, because again, it takes out the volatility, I guess, of food and energy for the most part, predominantly energy, right? But let me see, it was right about here. So the PCE PI is also weighed by data acquired through business surveys, which tend to be more reliable than consumer surveys used by the CPI. PCE PI also uses a formula that allows for changes in consumer behavior and changes that occur in the short term. These factors result in a more comprehensive measure of inflation. So this is the most important part, hypothetically. The Feds depend on the nuances that the PCE PI reveals, because even minimal inflation can be considered an indicator of a growing economy. Now, obviously, growing economy is beneficial, but in the sake of what the market wants, they want interest rate cuts to happen. Then a growing economy points to more inflation, which is going to be neglecting the fact that they will be cutting interest rates, or like taking away the factor that they will cut interest rates. So that is the problem. So if we see anything higher tomorrow, even a little bit, which is kind of crazy because I would assume that if it was just a little bit higher, it's not a big deal. But let's say if we end up getting like 3.0%, that's going to be significant. Will be higher than previously and showing no slowdown. So less likely that they will cut down interest rates, but we'll see. Again, that is the biggest factor for tomorrow. And then U.S. Treasury, by the way, so U.S. 10-year Treasury still growing. It's at 4.704%. Again, this is important because it takes away money from the markets for the most part in terms of stocks, because people will tend to move their money here when it's a safer play if the return becomes greater overall. Then we have crude oil at $83.76 a barrel. So it has increased. You can see slight good jump. And then in terms of analysis, so now if we look at, I'm going to look at the Dow Jones first and then go over the SPY/QQQ, which again is the same as S&P 500 and Nasdaq. They're just ETFs, more condensed. So if we look at the 5-year chart, again within these channels, we close at 38,085 points. And we could potentially come back down to bounce off this level because for some reason the Dow Jones, it was in sync with the S&P 500 and Nasdaq, but it's a little bit out of sync. It's showing prematurely that we're going to be going down, not necessarily tomorrow or maybe the next few trading days, but essentially it'll spike up. It looks like, again, by the way, this is all just my opinion. Please do own due diligence and research before buying and selling. But indication, so in terms of long term, they all show the same thing, SPY and Nasdaq and all stuff. But the short term, it shows that potentially it's still going to come down a little bit, like go up and then come back down sooner than later, as opposed to the S&P and Nasdaq. So 5-year chart shows we're in bearish movement by the MACD line, indicating potentially in terms of long term that it's still coming down, right? Again, even though it's coming down, it's overall the markets tend to go up anyway for the most part. So there'll be down days, but trajectories to the downside, if that makes sense. I'll cover more specifically, for example, the Nasdaq shows it more clear. And then in terms of 1-year chart, we were trying to cross over to a bullish territory, but if you could see, it's a red tick right there. So it looks like it's trying to go back to the bearish. So it was going to cross over to a bullish, but it looks like it's still dropping down back into the bearish territory. So then again, that's for the 1-year and 5-year movement. Now, if we go into 6 month, we drop down to the bearish movement right here. 3 month, I believe the same thing, bearish movement. Yeah, bearish movement. And it looked like it was going to start to tick up, but it ended up curving down for the most part. And then the 1 month is the only one that is bullish, but that's more shorter term. So that's the reason why I'm thinking, let's say for the next few trading days, we go up to the upside, right? Whether it be, for example, this level right here. So we're at 38,085 points. We go up to 38,562 points and then start dropping back down. And that is if we move past these moving averages right about here, which is pretty much going to collide. Yeah, I think we would pass them anyway because there's not really much resistance besides the moving averages. But either way, it'll be about 38,282 points. Again, we're sitting at 38,085 points right now. But I think predominantly the other level will be stopping it. So about 38,500 to give or take. Now, in terms of QQQ, so I'm going to cover QQQ first, which is the ETF of Nasdaq, and then I'm going to cover the S&P 500/SPY. So if we look at QQQ, again, the channel since 2010 stayed in the channel for the most part, broke through between 2020 to 2022, and then came back down underneath it and pretty much arched down right exactly underneath it. And then what I meant by, even though we are hypothetically, like we'll be stuck underneath the upward trend resistance line, let's say, for example, and even though we're stuck underneath the upward trend resistance line, we're still going up, if that makes sense, if the market's going up. So from 2014 to 2015, give or take, stuck underneath it, but nonetheless, the market was still going up overall, if that makes sense. Obviously not flying like crazy, but still going up. So in terms of the 5-year chart, MACD line is showing that it's in the bearish movement, right? And then, by the way, we closed at $424.45, and after hours, it's at $429.22. Now, I'm not gonna lie, I messed up today. I opened up a short position towards the end because of the PCE numbers in the morning, but it wasn't too close towards the end, and I forgot about earnings. So the reason why we spiked up was specifically for not Apple, Google and Microsoft. They beat earnings, plus others reported earnings too. I think Snapchat, stuff like that, so on and so forth. And they had such a major spike up in terms of after hours that it dragged the whole entire market with them. So that is the reason why you're seeing this. Now, I'm going to reflect of how the market will move based off tomorrow's numbers as well at the same time in terms of the PCE numbers, with combination of them beating earnings, because again, they're opening up tomorrow with that whole entire information. But I'll go over that either way. But yeah, I opened up short position, worst timing, because we'll see how it plays out tomorrow. I don't know, I'm not sure. But it was a small position, so it's not a big deal. But yeah, so in terms of the 6 month now, so again, that is for the 5 year and 1 year, or that's the 5 year, and now in the 1 year as well, it looked like it was going to try to arch up. Let me see if I could show this exactly. Yeah, so it looks like it was trying to arch up, but now it's trying to arch down again, still in the bearish movement. So again, that's 5 year and 1 year, so in terms of short term for the most part, or long term, sorry. And now in terms of short term, it's different than Dow Jones. It's showing to the upside. So if we see the 6 month bullish movement right now, 3 month bullish movement as well, and I believe the 1 month as well is the same thing. Yeah, so bullish movement also. But if you remember from the past few videos I've posted, the $430 price point, again, even though we're at it pretty much right now, but $424.45 is what we closed at, and then after hours $429.22. Now we did pass the 430 price point, but we're colliding with moving average plus horizontal resistance level. I think it's still going to be quite difficult. Now what's going to happen in the morning is, since those numbers, the PCE numbers, come out at 8:30 in the morning, if they are not good, they're higher than expected, then in my opinion the market is just going to go down anyway, regardless, right? And then the $430 price point could be tested again, but it just depends on how bad those numbers are. Not bad, but how high those numbers come in. So if they come in extremely hot, then we're going to test the lower levels I'm going to mention. If we come in better than expected, then we're going to go up. But I think for the most part, what's going to happen is we're going to consolidate for the most part around the $430 price point first, and then go over the other levels that I mentioned before, which was about $432, $433. And then after the $432, $433 price point, it was, I believe it was, where is it? Yeah, okay. So after $432, $433, I think we're going to test this upward trend support / resistance level that we've seen here before, seen here a bunch of times too as well, which is about the $436, $437 price point, give or take. Yeah, about $436, $437. And then I don't think we're going to go any higher than that personally for tomorrow. But that's just my opinion again. If there are other levels obviously, but I think that's the utmost max, because I think for the most part we're going to stay here for quite some time at about the $430 price point. But if the numbers are higher, the PCE numbers are higher than expected, that's when we start dropping. So it depends on how bad they are. If they're just moderate, or they're like slightly on what we're expecting, I think we'll pretty much still hover around the $424 price point. And if it gets a little bit worse, then we go down to essentially the $421, $420 price point, and slowly, it depends. So because of the Microsoft and Google, I think they'll still hold on to their gains, not a crazy amount, depending on how bad the numbers are, but a decent amount at least nonetheless, which will trickle down to the $418 price point, give or take, and then the $416. And then worst case scenario, it doesn't matter how good the earnings were, I guess, in my opinion, for the Alphabet / Google / Microsoft. If it's really bad in terms of PCE numbers, which I don't think they will be personally, because again, what the Fed is looking at specifically is the core, because that takes out energy and food, specifically the energy factor. If energy is taken out, then I think that will make the inflation numbers not too hot, if that makes sense. So if that is the case, I don't think we'll see these numbers, but if they do come in way higher than expected, then I think we'll test the $413, $414 price point once again, which is around this level right here. So it all depends on tomorrow's numbers, and that is for QQQ. Now in terms of SPY, almost the same effect factor, right? But we closed at $503.49, and then after hours spiked up to $507.21. Again, same effect because of Alphabet and Microsoft / Google, right? And the question is, how high will we go if the PCE numbers, because with the combination of those earnings, they're going to see the effects tomorrow come in even more, I guess, or potentially subside, depends on how they play. I haven't looked at them specifically, but depending on how well the numbers come in for tomorrow, if we start spiking up, we're already at a level pretty much where we're going to consolidate. So the level is $508, $509 consolidation phase, and then it's going to be difficult to pass the $510, right? $510. But then if we have this downward trend resistance line right about here, which I think collides with, $513, $514. But before that, we have on the high $511 price point, that we're going to have issues. So there's going to be a bunch of resistance level before we even get to this downward trend resistance line. I don't anticipate hitting this downward trend resistance line tomorrow unless the numbers are like way lower than expected. But either way, consolidate between somewhere between $508, $509 if they're pretty decent numbers, and then somehow probably test 510. And then if they are better than expected, go to the high 511, it's about 511.70 I think when I checked, and then ultimately test this downward trend resistance line potentially if it goes crazy to the upside, which is about $513, $514 price point. We've seen a bunch of times went up, knocked down, went up, knocked down, went up, knocked down, so on and so forth. QQQ did have this downward trend resistance line in sync as well. I don't see QQQ getting to that high level personally, because that's going to be a crazy jump if it were. That level is about $443, give or take. Again, that's way too high, but it did have a false breakout itself. It went up, tested, knocked down, tested, knocked down, but then false breakout here. But either way, back to SPY. Those are levels on the upside. Now, if we were to come to the downside because the numbers are higher than expected, then what would happen is we would drop back down to the $504, $505 price point in terms of support. Again, since this is after hours, maybe we'll probably just get back down to 503 anyway before the trading bell. And if that is the case, we consolidate down to 501, 502, ultimately potentially testing the 500 clean level. And then I think by the end of the day, if it's decent PCE numbers, like not decent, but it's still higher than expected, but it's just not horrendous, then I think we probably close around the $498, $499 price point in terms of support level. But if it is bad, hotter than expected, we'll head back down, break through those levels, and then 495. And then worst case scenario, I don't think we're going to test it though, but it all depends on how high these numbers are. So if the number is crazy high, then we're heading back down to $493 price point in terms of support level. So if, again, so for breakthrough 501, then 500, then 498, 499, I'm expecting to close at that price point because they're taking out energy from the core PCE. I don't expect it to go lower than 498, 499 if it were to go on the like higher than expected kind of thing. But if it's horrendous somehow, because I don't see it because the energy costs energy is getting taken out. But either way, if it is, then we're breaking through the 495, and then ultimately potentially, I still think 495 would probably be the lowest. But either way, if it were really bad, but 493 would be the most lowest. Again, this is just my opinion, so please do your own due diligence and research before buying and selling. But these are based off support levels that I'm noticing. But yeah, that's basically it for today's video. Hopefully I didn't miss anything. In terms of the VIX, we're at 15.38. But that was for today, so depends on tomorrow. This is volatility index, by the way, and that's basically it for today's video. Hopefully you guys enjoyed it. Hopefully you guys liked it. If you do, consider dropping a like. It does help the channel, so thank you so much for that. And I do post these daily, so if you want to be notified when I do upload these videos, consider subscribing so you'll be notified when I do upload the next one. And that's it. Thanks again for watching, and I'll see you guys in the next video. Peace.